This is Alan Bush with the daily financial forecast for Tuesday, August 11th. In the stock index futures, we are seeing prices lower this morning, in fact, sharply lower. This after China devalued their currency by 1.9%. This is the largest devaluation from China in 20 years. So basically what this does is it, in effect, supports the Chinese economy at the expense of economies elsewhere in the world, including the U.S. So that is the main reason why stock index futures are under pressure today. However, we do feel that there is likely to be some recovery later this afternoon. Also, don't forget that we do have that major double top in the September S&P 500 futures coming in at 21, 26, 25, and it's to the exact tick that both of these tops have been made. So there's a very clear-cut double top, meaning that there are probably buy stops building above that point. Anyone that is short, I think, will have their stop very likely above that double top pattern. So ultimately, I think we will take out those buy stops. I'm not sure how soon. It may take a while, but ultimately expect that double top to be taken out to the upside. Now, moving over to the foreign currencies, we're seeing the dollar index under some pressure today, even though we did have this Chinese devaluation. And I think the logic behind a weaker dollar is that with the Chinese devaluation, it puts pressure on the Fed to delay a interest rate increase so that the dollar then is likely to come under some additional pressure from an interest rate differential point of view. Also, we are seeing the euro currency higher after better than expected economic data over the last couple of days. And we had Greece now apparently agreeing to some type of bailout terms with its Eurozone creditors, now with Greece on track to get its third financial bailout. So longer term, I think we can see the dollar index coming under some pressure, as it is likely that the Fed will delay a rate increase, even though the consensus view is that the Fed will raise rates this year, with actually a majority of analysts thinking that there will be a rate increase at the September meeting. Now, moving over to the commodity currencies, the Canadian dollar and the Australian dollar both lower. This due to weaker crude oil prices. Also, the Chinese currency devaluation putting some additional pressure on the Australian dollar, basically because it exerts an influence on the Reserve Bank of Australia to keep their interest rates low there in order to keep a competitive export edge. Now, moving over to the interest rate markets, futures higher across the board. And this, of course, again, due to the Chinese currency devaluation, which has the impact of lowering interest rates globally, including here in the U.S. So interest rate markets higher, at least the futures are higher, yields are lower. Also, we do have some supply this week, but that apparently is not going to be that much of a factor. So a lot of cross currents in the interest rate markets, the currency devaluation, the prospects of a Fed funds rate increase, at least according to the consensus view. So I think I'd stand aside in the interest rate futures markets, but I would concentrate more on the long side of stock index futures on any kind of weakness, which we're seeing today. And I do expect a recovery to some degree in stock indices. And also I would focus on the short side of the dollar index, as the Fed is likely to be very slow to raise interest rates. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.